Before we even reach adulthood, the game is stacked against us. And most of us are still playing by the wrong rules. So here's what they never taught you about money. And I can't help but feel that it's intentional that schools don't teach more about personal finance. Money is something that we will manage until the day we die. It's honestly the one thing that affects everyone's life. Yet, for the most part, we have to figure it out on our own, and I have a theory as to why. And it really all comes down to this. Financial irresponsibility makes the economy thrive. I mean, if we think about financially literate people for one moment, and I'm talking about people who save money, who spend wisely, who avoid unnecessary debt, even though at the end of the day, all of that's wonderful, those habits don't exactly benefit retailers and banks. And if a greater percentage of the population truly understood how to manage their money, how to control their impulses, how to be responsible with credit, the flow of money in the economy would probably slow down. I can't tell you the number of comments and messages that I've received from people saying things like, I didn't know any of this before, but now that I do, I'm making changes. And granted, some people aren't going to care either way. But if more people were formally introduced to personal finance at a younger age, and it was included throughout the curriculum, like history, general math, and science, resulting in more financially savvy people, imagine the ripple effect that could have. And I'm talking about fewer people in debt, more emergency savings, less unnecessary spending. But to be fair, some states do recognize this gap and now require some personal finance education. But even then, it's usually only a single semester, which is barely enough to scratch the surface. And in other states, personal finance is an optional course. So you still have a lot of students who go through school and get their diplomas without learning anything meaningful about money management. And there are a lot of arguments as to why it's this way, but one explanation that I hear often is that when it comes to personal finance and money management, some people feel that that is a life skill, thus it's the responsibility of the parents to teach. We're also set up to fail because everywhere you go, everything is built to encourage spending. Have you noticed that just about every single store seems so determined to get you to open up their credit card? It doesn't matter how many credit cards you have in your wallet or whether you're paying that day with a Visa or a MasterCard, the clerk is going to ask you, do you want to save money today by opening up a store account? And pay attention because they're not going to just ask you to complete an application. They're going to lead with, you can save money and you can get a discount by doing this. And for some people, it's very tempting because if you have $100 worth of merchandise on that counter and you get approved and you get to take 20% off, that's a $20 savings, and who doesn't want to save money? But regardless of what small discount you get that day, that card is ultimately designed to encourage spending, which could lead to debt and overconsumption. And keep in mind that this isn't limited to retailers because even banks and lenders can push products that you didn't plan to get. When we were closing on our house, we went to the bank to wire funds to our closing agent, and we were seated in cubicles, but they really didn't provide a whole lot of privacy. So if someone was seated next to you or behind you, you could pretty much hear their whole conversation. And I remember the guy seated next to us. He came in because he had a simple question about his account. So he's talking with the banker, she addresses his issue, but before he leaves, she's like, well, I see that you have a mortgage with our bank or something like that. And then she starts to upsell him on getting a home equity line of credit. Now he came in after us and I pretty much heard their whole conversation, and not once did this guy ever mention about getting any type of loan or home equity line. And I could hear some hesitation in his voice, and he was like, no, I never really thought about it. But the banker, she was on it. She immediately started telling him the benefits of opening the account, how he can use the money, how it can just be there just in case. And just like that, he agreed and applied for a new line of credit that wasn't even on his radar 20 minutes ago. It's subtle, it's everywhere, and it's so easy to fall into this trap if you're not paying attention. And finally, let's talk about this illusion of success. So many people still equate success with what they can see. Whether it's big houses, luxury cars, expensive vacations, I've seen videos of people driving through neighborhoods with massive homes saying that they do it to be inspired by people who've made it. But what some people forget is that appearances can be deceiving. Just because someone has a big home does not necessarily mean that they're doing good financially. It doesn't mean that they're happy. And it doesn't necessarily mean that they're successful. I've seen so many forum posts, I've seen videos, and I've had conversations with people about downsizing where they've gone out, bought their dream home, thinking that it was going to make them happy or feel successful, only to be quickly overwhelmed by maintenance and expenses, even though they make really good money. And one thing that I don't think a lot of people really consider until they're actually in it and it's too late is that higher expenses typically mean less freedom and less options. Someone who has a $3,500, a $4,000, or even a $5,000 mortgage payment cannot as easily leave a toxic job or maybe switch to a one-income household or take a mental break as easily as someone who has the same income but has a $2,000 mortgage payment. If you want 5 bedrooms, 3,500 square feet, and a pool in the backyard, there's nothing wrong with that if you can afford it. But just realize that that means that you will have to continue earning at that level for the next 20 or 30 years, possibly with no breaks. And if you ever want to take a break down the road or just have less financial pressure, that might not even be an option, which could leave you feeling stuck and unhappy. People with smaller or average size homes, even though they can technically afford more, often enjoy more flexibility and they're able to live life on their terms. They may not have super nice cars or enormous houses, but they do have peace of mind. Yet so many people still believe the idea that bigger always equals better.